Hi guys, welcome on this new video. Um, Today I'd like to show you something on moving averages and why I think they are very useful to understand the trend of an asset. In particular, here we have the S&P 500 index. I'm using TradingView, and I just want to make a comparison with the trend lines. Honestly, I'm not a big fan of trend lines because they are very arguable. They are not objective as a moving average can be. So first of all, I want to say a thing. Um, when we analyze markets, it is important to understand in what stage of trend we are in. Okay, so for example, I'm analyzing stock. Is this stock in trend? The stock is increasing or is in a side stage, in a side market? Well, the problem of trend lines is this, and follow me. Let's suppose we are in this period. Okay, so our period sample ends in May 2024. Okay, so we can trace a trend line, a very big trend line like this, and we are taking all the minimums over the way. So this is a minimum, this can be a minimum, and here you can already see the problem with this minimum, 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 etc. So we trace this trend line. So what happens here? We have a very big red candle. So in according to technical analysis, in this moment trend is ending. So it is not more a positive trend. The price went down the trend line. So um, maybe we can turn our position short. But the problem is this: if we go forward over the time, this is not a trend, this is just a pullback. This is not a trend ending, it is just a pullback. So um, we can draw this type of trend line. We can draw this other trend line. So the problem is that they are arguable. So I prefer using moving averages. Um, about the period, about the time frame, here we are analyzing a daily chart, but honestly I prefer weekly chart. This because personally I trade stocks. um, I use I don't use so much charts. I just need charts to analyze potential targets, to analyze stop loss, and to understand where the price is. Because if price is falling, maybe there's a problem. Because remember that technical analysis is lagging. Price is formed by fundamental factors, especially stock markets. So what you see on chart is something already happened in the past. So be careful. I prefer to use, for example, on a daily chart, the 20-day period moving average and the 120 period. So as you can see, it is true that the price here went down, my moving average, the 100,000 120 periods, sorry, um, moving average. But the, what I try to say is that I don't use moving average to make predictions or as triggers in my trading strategies, because maybe it can work, but you have to prove it with backtesting, and you can do it. But I can assure to you, well, I cannot assure, but there is a very high probability that trading strategy with moving average crossover will not work. So why these two periods? 20 is number of trading days in a month. So this simply is the monthly moving average, and this is the 6 months moving average. As you can see, the moving average on 120 periods is objective, is not arguable as a trend line. Look at this. We repeated the experiment done before. Here it is ended, it is over the increasing period, the positive period, but in according to moving average, it is still a positive trend. So there's no reason to worry. But using the trend lines here, I have to worry and maybe starting to short some position. Okay, so I'm not a fan, repeat, of the trend lines. Well, here we can note there is a very strong recovery from the descending movement. So we can think to a rebounds. Okay, and well, moving average have another interesting feature. For example, you can see here that after price decreased over the 20 days moving average, price tried to rebound over, but it was rejected on the moving average. So what I'm trying to saying, moving average act also as support and resistances, and this is very important because another aspect of technical analysis, another tool of technical analysis are support and resistance. Um, Honestly, they are more objective than trend lines, but they have other type of problems. For example, you cannot consider a single level of price, but you should consider areas of price. So about this, also moving average maybe are not so useful if you want to identify entire areas, but we are thinking on long term, so it is not so important to consider areas. You just want to identify maybe some support or resistance level, and here, for example, the moving average did this very very well. So price, the enter price is perfectly on the moving average, and here, for example, the low price of this candle is almost on the moving average. Here, when started the rebounds after the take off of the duties, the duties taxes, the minimum price of this candle is on the moving average, the 20 days moving average. So you can honestly you can play with the different periods of moving averages. I prefer to consider just monthly and 6 months, but you can consider, for example, the 200s period moving average, three months, that is the quarter. Now, for example, we are probably in a crisis period because it was so violent, the descending of prices. Yeah, it seems to be a recovery here, but we just have to analyze fundamentals, like I said before. Well, this video is just a video to prove you that drawing trend lines is not so useful in your trading. This is because our main goal is to understand in what stage markets are. So trend, side market, for example, here we have a side market considering the monthly, but the background trend is absolutely positive. Here we have a side market, very long side market. As you can see, the 20 days period, the 20 days, yeah, moving average goes up, goes down, and to the 120 periods is steady. So this is a very clear side market. So don't forget, never forget to analyze fundamentals. Don't trust just technical analysis, because technical analysis itself is not useful. Um, so it is better to have more arrow as possible to use. So if you enjoyed this type of video, I please you to subscribe, like, and see you in the next video. Bye.